Semiconductor stocks like Nvidia, Broadcom, AMD are really seeing their stock prices crash. Why is it happening? And is it going to continue? That's what I want to talk about in this video. I'll give you my point of view on it. I've been an investor in semiconductor for a long time. I did really well investing in Broadcom, did really well investing in TSM, and I'm currently just a small investor in Qualcomm. So what's going on? Well, if you look at the semiconductor space, it's a tale of how expensive stocks have gotten and how they're priced to perfection. And now that perfection is not going to be achieved, the stock prices are really crashing down. Nvidia is really up. If you look at the 5 year, Nvidia is up 1,562%. Broadcom's up 565%. TSM 219. Those are just valuations that really went through the roof. And that's part of why the stocks are coming down so much, is that they were so expensive. And I think when people began to price Nvidia, especially, they priced it as if it was going to have a very sustainable revenue. And semiconductor is a cyclical industry where you have years or periods, maybe 2-3 years, where you have these really boom periods of growth, followed by periods when demand goes down. Let's think through that, and I'll give you an example. Most of the technologies that these companies produce end up in some type of technology device. Let's say an iPhone or a laptop. And when you buy a new laptop, you don't consume it every year. It's not like Netflix, where every month I have to pay Netflix my subscription. They get to renew their income stream every month, and it just keeps going forever until I stop subscribing. Well, the laptop, on the other hand, I get to use, let's say, AMD's technology or even Broadcom's technology in an iPhone, and I might buy it and keep it for 5 years before I refresh my hardware device. I don't have to buy it every year. And when times get tough, maybe we get into a recession, people keep their hardware for longer. Businesses keep servers for longer. Just the refresh cycles don't happen as often. So you see these down periods for semiconductor. That's what I mean by cyclical. There's a buildup of infrastructure or a buildup of people buying new devices. Then you have a lull in demand. Whereas other industries like Meta, Google Alphabet, Netflix, they have reoccurring businesses. Their businesses just keep refreshing the advertisement that they sell or subscriptions that they sell. So that's part of why I think the market's really selling off, that these stocks were priced for perfection. And in my opinion, incorrectly, they were modeled to just continue to grow their revenues in a linear manner up and to the right, where I think all these businesses are going to have some type of contraction in the horizon. So I think that's part of it. Now, when we zero in, that's the 5 year. When we look at the 1 year, these businesses are really telling us something. First, AMD has already dropped substantially over the 12-month. Qualcomm's down 7%. And NVIDIA still has a positive 12-month. That's interesting. Broadcom as well, and TSM. Let's keep bringing in the chart. Now, when we go to the 6-month, it doesn't change things a whole lot. Let's go to the year to date. That's where things get really interesting. In 2025, NVIDIA is down 17.6%. Broadcom down 22%. TSM down 11%. AMD down 18%. Qualcomm's just up a tiny bit. So this big correction in semiconductor, I think, is going to continue. The reason for it is I'm going to show you valuations on some of these semiconductors, and the valuations that I have are based primarily on free cash flows that I expect each company to produce. And I'll show you that NVIDIA, Broadcom, and TSM are priced too high. NVIDIA is a great company. Obviously, they're super intelligent. They created great GPUs, and their stock, their market cap just exploded. And when I look at the value of the company, if I look at just the cash forecast that I have for NVIDIA, and that's a pretty generous cash forecast, seeing their cash grow in the current year, following year, and then come down, because again, I believe they're a cyclical business. I still give them a very generous forecast for free cash flows. The best that I can do is get to $1.4 trillion of value for that cash flow. The cash on the balance sheet's 43 billion. So I add that and then I take away debt. So we're getting to an equity value of 1.46 trillion, but the market cap's 2.7 trillion. So there's a big difference in what their cash flows are worth today versus where the stock price is at. And I think that's the big correction that's happening. Stocks, basically, the value of a stock is the future cash flows of that company, the future cash flows it can produce. That's the most true, tried and tested method of seeing what a company is worth. At times, a company can trade above its intrinsic value. At times, it can trade below. I'm trying to find stocks that are trading below its intrinsic value, not above. And this one has been well above its intrinsic value for a long time. Over time, stocks will correct and they'll come down to their intrinsic value. And that's what we are observing with NVIDIA. They have a ways to go. And it looks like they're getting there in a hurry if we keep seeing the NVIDIA stock really sell off. When I look at Broadcom, a very similar situation. Broadcom really rode the coattails of NVIDIA and its price really flourished. But now it's really correcting fast. And when I look at the intrinsic value of the cash flows I expect from Broadcom, the stock is still priced 45% above its intrinsic value based on cash flows. And that's even after a big price reduction today to its stock price. So Broadcom has a ways to go before it gets to what I would say is a fair value and a fair price, which would be stock price equal to the intrinsic value of its cash flows. How are these stocks trading against their all-time high? And the all-time highs have been achieved in all cases recently. Well, if we look at NVIDIA, it's 27% below its all-time high. And it's heading south. As shown, it's well above its intrinsic value. Broadcom, 28% below its all-time high. TSM, 21%. Qualcomm, 32%. Across the board, all these stocks are correcting. The smaller, the faster they're correcting. And these stocks, as they announce earnings, their earnings reports seem positive. They have growth. They are showing that they're expanding the business, but the market just is not liking the fact that even with those excellent earnings, it's selling off these stocks. Again, my conclusion being is they were priced too high. The hype around AI, the expectation that data centers will just continue to receive these huge investments of capital are going to continue for the next 10 years. That was such a bullish, expectation. But you think about how many businesses would go bankrupt just trying to spend that kind of money. It was just something that I thought was irrational to think was actually going to happen. Marvell, as an example, announced yesterday they had a very good earnings and their stock plummeted substantially, double digits. And now they're down 43% overall. And I think these stocks will continue to get punished. The stock market tends to establish momentum either on its way up or its way down and overachieve the mark. In the case of semiconductors, the market just kept pricing them up well above what these companies were worth. And it ended up pricing these stocks too high. On the way down, I would not be surprised if a lot of these stocks really cratered and the stock prices really went down past their intrinsic value because the market's just going to be selling them off. If you imagine NVIDIA as an example, which NVIDIA is, again, a great company, if their stock price gets to $80 a share, just about nobody's going to want to own it. If you look at the performance over the 12-month or the 3-month, it's just going to look like a terrible stock and people will not want to own it. It'll continue to sell off. We'll see how low they get. And it may end up becoming a really good opportunity for a value investor like myself. So the crash in semiconductor is certainly incredibly interesting. And we'll see how far down it goes. My guess is that this is going to be a pretty painful process for investors to experience if you're invested in one of these big stocks. It was probably a euphoric experience to see these stocks go up for a couple of years. And now it's just going to be a really, really trail of tears to see these stocks sell off. We'll see how it goes. For all I know, the market will catch some really good news and start rallying again. But my expectation is that semiconductor stocks will continue to really sell off and really correct to its true value, which is based on cash flows. So that's my point of view on semiconductor. I've been sharing videos on the semiconductor industry for about a year, really sharing these concerns. And again, I wanted to say a few things about semiconductor, which is I've made money on Broadcom. It's a really good company. I've made money on TSM, quality business. NVIDIA is a great business. These are great businesses. They're just overpriced and they need to be corrected. The market's definitely going to do that over time. So that's my video on the semiconductor industry and the crash that we're observing. I hope you found it interesting. Thank you for watching. Good luck investing.